Welcome to this week's Market Update, where we review the key developments that shape markets, highlight what drove our recent performance, and look ahead to important events on the horizon. Let's start with what moved markets this past week. The big story continues to be the underlying strength of the economy, which keeps showing more resilience than many expected. Recent economic releases continue to paint a picture of steady, sustainable growth. Consumer activity and employment indicators remain solid, showing few signs of the slowdown many predicted would follow higher rates. While some interest-sensitive areas of the economy are feeling pressure, overall demand remains strong enough to support company revenues. For our portfolios, this reduces near-term recession risk and supports our focus on quality businesses tied to durable economic activity. It's exactly the kind of environment where disciplined stock selection really matters. Bond markets have shown remarkable stability lately, with yields holding relatively steady as investors balance firm economic data with expectations for a patient Federal Reserve. The market seems increasingly confident that policymakers can guide us through without dramatic shifts. This creates an attractive environment for fixed income where yields remain appealing while there's potential for price gains if economic conditions moderate. It's a reminder that bonds continue to play an important role in portfolios, offering both income and stability. Stock markets have responded constructively to this balanced economic picture. When economic data supports company earnings without forcing the Fed to tighten policy further, it's a positive backdrop for equities. We're seeing leadership from companies with strong fundamentals, while broader participation reflects improving investor confidence. This environment rewards our approach of owning quality businesses that can thrive through both earnings growth and improving valuations. We're finding opportunities across sectors, from technology leaders to industrial companies capitalizing on infrastructure investment. Now let's look at what drove our performance over the past week and why we remain confident in our positioning. Meta Platforms was our top performer with a 4.3% gain, continuing its impressive run as businesses increasingly rely on AI-enhanced advertising. Meta has combined two powerful advantages: the largest social media platforms in the world and cutting-edge artificial intelligence that makes advertising more effective. This creates a virtuous cycle where better AI attracts more advertising spending, which funds further AI development. The company's disciplined cost management has also expanded profit margins, while investing in future growth. It's exactly the kind of platform business we favor: multiple revenue streams, strong cash generation, and technology leadership competitors can't easily replicate. The industrial sector emerged as our strongest performing sector this week, led by Caterpillar's solid gains. Several factors are converging here. Government infrastructure investment continues to flow, businesses are investing in equipment, and industrial leaders with global scale can navigate supply chain challenges better than smaller competitors. What makes industrial performance particularly meaningful is that it reflects actual economic activity, companies building things, moving materials, and generating tangible output. This connection to real-world demand provides a foundation of earnings that can prove more durable than sentiment-driven returns. Our focus on large-cap, high-quality companies once again proved its value this week. Holdings like Meta, Tesla, and Caterpillar all delivered meaningful gains, demonstrating why size and financial strength matter in uncertain markets. During periods when different sectors move in different directions, owning companies with proven business models and strong balance sheets provides important stability. These companies have the resources to invest in innovation and adapt to changing conditions. Our Canadian holding Royal Bank also contributed positively, showing that quality leadership extends beyond U.S. technology into financial services as well. Looking ahead, here are the key events we're monitoring that could shape markets next week. The Federal Reserve's first meeting of 2026 takes place next week, with the policy decision and press conference scheduled for Wednesday afternoon. Markets expect the Fed to hold rates steady, but Fed Chair Powell's comments will be closely watched for hints about future cuts. With inflation still running about 2.8% and economic growth remaining solid, the Fed faces a delicate balancing act. This meeting will help set expectations for how quickly rates might decline, which affects everything from bond prices to stock valuations. Tuesday morning brings the Consumer Confidence Report, one of our most watched measures of how Americans feel about the economy. This matters because consumer spending accounts for roughly 2/3 of economic activity, so confidence levels directly impact spending patterns. Recent readings have shown consumers remain relatively optimistic despite higher prices. We'll be watching for any shifts that could signal changes in spending ahead. Strong confidence supports our consumer-facing holdings, while any weakness might warrant more cautious positioning. Thursday brings the Personal Consumption Expenditures Price Index, the Federal Reserve's preferred inflation measure. This report will show how prices changed in December, providing the most current inflation snapshot. Core PCE currently sits around 2.8%, still above the Fed's 2% target. This data comes just one day after the Fed meeting, so markets will watch closely to see if inflation trends support the Fed's patient approach. Continued progress would support the case for eventual rate cuts, which tends to benefit both stocks and bonds. As always, we remain focused on what matters most, helping you achieve your long-term financial goals through disciplined investing and thoughtful portfolio management. Thanks for joining us, and we'll see you next week.